Hello everyone, welcome back to the Daily Gold YouTube channel. This video is being recorded on Friday evening, November 29th, 2024. Thank you so much for joining me. Hope you all had a great Thanksgiving. Hope you're not too tired today with all that turkey yesterday and the leftovers today. So hope you're doing fine. Hope you had a great week and hope you have a great weekend as well. So in this video, as we always do on Fridays, we're going to recap the week. And the story of the week this week to me is, and the story of this correction right now in gold and silver is how we are seeing volatility declining in both gold and silver. So let me talk about that. Let's get to the video. Okay, so starting off here, we have a different chart. This is the volatility index for gold. Some of you know about the VIX, the VIX for the stock market, which is a great indicator that the people follow. GVZ for gold is very similar. This is the volatility index for gold. Here's the data right here for GVZ, and here is gold. So this is daily closing data for both. And this is where we are right now. Volatility has made some lower highs, and it looks like potentially it could dribble down here. I closed at 16. Maybe over the next month or so, it kind of dribbles down here towards 15 or even a bit lower. And normally when you get a huge surge in volatility, that tends to come with respect to gold around market peaks or even market bottoms. So I labeled here with the vertical blue line various peaks going back since the contract started in early 2010. We can see here volatility spike here. That was a secular peak. In the middle of this decline, 2013, this was the nastiest decline in gold's history other than in the early 80s. And so this was kind of a crash here, and we could see volatility spiked. Then it spiked again. This was a low that actually held for a while, even though it was a cyclical bear market and a secular bear market. This low, we could see, held for a while. This spike here was a little bit after the bottom here. In COVID, you had this spike here during the COVID crash. Again, volatility spikes during bottoms and crashes. Then you had this spike here. I believe this was probably the Russian invasion. So that marked an interim peak. Another spike here in, I think, the spring of 2023. So it's actually, it might be a good sign that, we've had this move like this and we haven't seen a spike in volatility. Had we seen a big spike in volatility, perhaps this would have marked a more significant peak. I'm not saying it can't be, but the fact that volatility is kind of dribbling to the downside here, and maybe you could if you put in a trend line here. I'm not a fan of trend lines, but you could put a trend line here, and maybe you get a move like that, and gold could correct, kind of go sideways. People lose interest for a month or two, so that's definitely possible. But that's where we are. I guess the bottom line is I'm glad that we didn't peak after a big spike like this. Same thing with silver. So this is silver here. Again, daily data. This is the average true range indicator. So this is not traded like the gold VIX. This is an indicator based on silver's price action. And, a lot of these momentum indicators and various indicators, they are derivatives of price. So I'm not always a huge fan. But in this case, this is a worthy indicator because we can see, again, it's a volatility indicator. We can see the spikes in the volatility. They tend to coincide with, tops or bottoms in silver, or at least points that are very close to those. I don't need to go over all these points, but you can see this spike, COVID crash. Then later, this huge move higher. You had the spike here. So you did have a bit of a spike here in the middle of 2024. So volatility is coming down. Again, I kind of feel similarly, that's hard to say, with respect to volatility and silver relative to gold. It's good that we didn't see some huge move higher like that, because we can see that those moves can correspond to more significant peaks. So, but volatility is coming down. Bottom line, that could be, if we see volatility kind of dribble lower, it's not necessarily a bad thing. So that's volatility for gold and silver, something we should keep watching, especially as this correction could continue, more so in terms of time than price. But it is possible it can continue in terms of price. Now, here are the typical charts. Daily candle for gold and silver. I'm going to run through these quick because I don't want to want this to be a 20-minute video. I mentioned this last week. Corrections typically look like this. You have down, up, down. And this here could actually be part of A in a larger correction. So keep that in mind. But look, we have this here, had the B move up, and now we had the hard decline earlier this week. Bit of a rebound, but this could be the C leg, the C leg of a correction. So we'll see. Possibly the same thing with silver. I mean, this is interesting. So there's resistance at 3150. Can silver move above that? If it does, we know that 32.33 is significant resistance. I'll talk about that on the weekly. With gold, looking at the 200-day, 24.36. Again, I think this will go above 2,500, I think, before we get to January. So in the next month or two, we should see really strong support filling in around 2,500. Moving to the weekly chart, good close to the week, good rebound. These are bullish hammers, but with respect to gold, a bullish hammer is more bullish when it comes after a downtrend, like that hammer right there. We've only had a little bit of a sell-off, a rebound, then a bullish hammer. It's not really a bullish hammer at that point. But again, not a bad candle. So, similar to last week, I could, talk here for 10 or 20 minutes, but the reality is not a lot is happening. We're still in a correction. Market got oversold, they're rebounded. So what's next? Again, silver 32.33. Here's the weekly resistance right at 32. Remember, we're coming up on December, end of the year, end of the quarter. 32 is yearly and quarterly resistance. So keep that in mind over the next couple weeks. Now, before we get to the stocks, I'm going to let you know about the Daily Gold Premium. The reason is in the last 2 weeks, we completely updated our top 10 list and our top 10 watch list. And you can see these in every update. By the way, this shows what you have in the updates. We have a summary on the first page, top 10 company table with all these notes, model portfolio, sometimes a company report. But in the last 2 updates, so we completely updated our top 10 table and our top 10 watch list. So there's 7 companies on the top 10 watch list, 10 companies, of course, in the top 10 table. And you have a market cap, cash and debt, and also notes that are around 200 words. So it's like, a paragraph or 2 of notes. And these things come in about 2 or 3 pages. So you can quickly look at this list and see all of our favorite companies in the notes. You can be filled in on everything that's going on with these companies, with around 200 words. So because of that, and these are current, by the way, so it's a great time to subscribe and check out those updates. Yes, and we'd love to have you aboard. And with that, let me wrap this up with the miners. We got to keep in mind the big picture if you didn't listen to us last week. And with respect to GDX and GDXJ, more so GDX, it came up to this resistance here, and we can see based on the monthly candles, October, we had a breakout, turned into be a failed breakout. The month before, good close, but not quite. It tested this area, but it closed below it. So this is important resistance. And so far this month, this is the end of the month. I just realized that this is the end of the month because Monday will be December. So at the end of the month, good recovery, but I still think this could take a couple months of consolidation before we see a move like that. Same thing with GDXJ. We've had this good move, but sometimes markets need to rest and digest it for a couple months. So that's where we are at the miners. I'm not expecting anything explosive in the next month or two. Now, wrapping things up in the short term, what do we say about these candles? I mean, we bounced at support. We can see that. We bounced at support, and, we had some decent candles. Nothing great this week. We had the big sell-off to start the week, then a bit of a recovery. They're still above support. I don't know what to say. Are these going to continue up to resistance? Maybe. I mean, they can also just kind of skate here for a while, kind of consolidate. So, again, those are the possibilities. There's not a lot of hard evidence right now for me either way. And so, again, that's why I don't want to spend too much of my time and your time listening to me kind of babble saying, well, it could go up, it could go down, it could go sideways, because that's the reality right now. The short term is a little uncertain. But, a couple weeks ago, we did get really oversold. So that's going to take some time to work through. So I wouldn't expect a big move lower in the miners at this point over the short term, at least in December. So that's it for me today. Thank you so much for tuning in. Let me know what you think about the short term or about anything I discussed in this video. Would love to hear your thoughts. Leave a comment, and hope you guys have a great weekend. And I'll talk to you guys again for Macro Mondays on Monday.